So welcome back to module number 5 in our mini course. This course is entitled Catching Market Tops and Bottoms Using Elliott Wave Theory. And in module 5, I'm going to talk about entering trades and placing stop losses using the rules and the guidelines of Elliott Wave Theory. So we're going to kind of harness all the knowledge that we've gone through in the previous 4 videos. And if you haven't already checked out those videos, you should go back and start really at module number 1. We're going to harness that knowledge and we're going to put it into practice on the charts and to show you how you would pick entry points for your trades, be they long or short trades, how all the previous 4 modules come together to set up trading ideas for you. So I'm going to go through spotting reversals in the charts and how that plays out in the price action. I'm going to go through what an Elliottician calls confirming price action. This is price action on a short-term chart which confirms the larger count you have on a longer-term chart. So if you have a longer-term chart which has a rally in wave A and a correction in wave B and you think that's complete, how to use short-term charts to confirm if that structure is in fact complete. And then we'll go into trade entry strategies. So once you've spotted the reversal on the chart and you've got the confirming price action, then it's time to enter a trade. I'm going to show you the strategies that I use to give me the least risk with the most potential reward, and where that happens on the chart, how you would confirm that happening in real time on a short-term chart. Again, we're going to use the dollar-yen example, the up-to-date live charting on that, and we're going to show you what reversals look like in real time and how to use that information in your trading. So without further ado, let's get on in there and get charting. So here we have our wave 1, 2 low off the bottom again in dollar yen. I'm going to label this and I'm going to bring you through what an Elliott wave trader would use to enter a trade in this market. Okay, so we had our 5-wave structure up off the price low at 75.56 there. And we had wave 3, wave 4 completed very sharply, and wave 5 completed wave 1 to the upside. So since then we had off that high we had a 3-wave decline to the low. I'm going to use ABC labeling. This is just to keep it uncomplicated. In reality, this was probably a WXY complex correction to the downside, but ABC will suit for this purposes because it indicates a correction. Now with the wave 2 correction, like I said in the previous video, we can be expecting price to move down into the territory of the wave 1 at one lesser degree. So it gave us price targets at between 50%, 61.8%, and into the price territory of wave 1 of one lesser degree. So you can see that the correction made those, it made all those waypoints very quickly, and wave A even pushed down right into the price territory of one lesser degree. Now off that low, it would have given a false signal. We had a 3-wave rise. Why do I know that this was a corrective rise? Well, it's in 3 waves and it formed wave B. You would have known that in real time as this corrective rally unfolded. You would have seen 3 waves unfold and retracements of those inner waves happen pretty quickly. So you would have known that this was probably a wave B rise and not the rally we were expecting in wave 3. So we were looking for price to come into the price territory of wave 1 at one lesser degree. And when that happened immediately, you would be switching on your kind of your testing scenarios to test the market to the upside. The most opportune time, obviously, is off the wave C low. So we have our wave 1 and 2 complete. We have our structure complete, our Elliott wave structure. That means 5 waves up and 3 waves down, complete. And once an Elliott wave trader would notice that the structure is coming to a completion, that price is approaching the wave 1 price territory at one lesser degree, that would have definitely perked your interest and you would have been looking to the upside again. You would have been seeing oversold levels at a higher low. You would have seen kind of real declining momentum to the downside, and that would be the point to start testing the market to the upside. Now, how do you go about testing the market to the upside? Right, well, the first thing to look for is a complete pattern. We've got the complete pattern. The second thing to look for would be declining momentums on to the downside. We have our declining momentum to the downside. The third thing to look for would be spikes to the upside. You could see here in wave B, you'd have this kind of false signal to the upside, which was retraced completely. But at the low here, you'd start to get spikes to the upside and higher lows being created off the wave 2 low. Now here you would be getting very interested in this price action. It would be signaling to you that this wave 1-2 structure was complete and you're starting to move up into wave 3. Now, a strategy that I like to use for trade entry using Elliott wave structures as my guiding tool is placing your entry at the wave B high of one lesser degree. So now we have our impulsive structure set. We have our 3-wave decline. So what I'm going to do is get in here to one lower degree again for trade entry. So we're working with kind of 3 degrees of trend here. We're working with the blue labels, the largest degree of trend. We're working with the red labels, the internal wave structure of that larger degree. And now we're looking at price structure moving in the next lower degree. So what we're looking at the next lower degree is impulsive moves to the upside to give us a signal that the larger structure has moved back into trend again. So let's get down here into this price structure here and I'll tell you how I would go about placing a trade. So here we are looking at the shorter term price structure. It's a 4-hour chart off the low in wave C. Now at this point, at the low in wave C, you would not have known that that was the low. But you would have been looking for signals to point you in that direction. Now what you'll see off the low is a completed 5-wave structure, again, to the upside, and a corrective structure to the downside. Now what I'll actually do here is label this again. So here is the labeling I would use on this shorter term chart. We've got 1, 2, 3, 4, 5 wave move to the upside. And this would be a very powerful Elliott wave signal that the market is about to move back into trend. And again, off that wave 5 high, we had a 3-wave move to the downside. I've labeled it ABC. We're in a short-term chart. We're looking at a very large degree of trend change in dollar yen, and we're looking to the upside. So an Elliott wave trader would look to place a trade at the B wave high of that trend change. So now we've got our impulsive move to the upside, we have our corrective move to the downside, and here's our B wave high. So that came in at 78.31 or 78.37. So we know that if this is a corrective structure and that if price moves back up through that corrective structure, we know that it's likely moving back into trend again. So this is a turn at 3 degrees of trend here. So what I would be doing as an Elliott wave trader is placing an order at that wave B high, and your stop level would be at the wave C low or just below the wave C low. So you'd see prices moving back up off the wave C low. Price would trigger that wave B, that order at the wave B high, and we would have a relatively tight stop to work off once the price starts moving back into trend again. And we know that the larger degree trend that we are expecting is a very powerful move in a wave 3 blue. So we know that if our trade is triggered, it should move past that point pretty quickly. And what actually happened was the price did move past that point very quickly. And with a trailing stop methodology, I mean, you would have easily reduced your risk very quickly. So that's kind of the essence of a low risk Elliott wave trade, is working from a top-down scenario, figuring out your trend, figuring out where your counter trend move has possibly completed, figuring out where your large degree trend is going to go in the future, and working from the top down to a shorter degree time frame to give you the best risk reward trade entry scenario. In this 5-module course, we've brought you through defining the dominant trend. We've We've talked about defining corrections. We've talked about figuring out the maturity of any particular trend. We've talked about making price projections, and we've talked about trade entry. So I hope you enjoyed this mini course, and if you want to learn more, be sure to subscribe, and we do daily Elliott wave analysis there. And we'll see you back on the website soon enough. Thanks very much.